and Assalamualaikum to Dr. Narhani and fellow friends. My name is NORSHAHIDA binti Rozli, metric number 267988. So today I will present on case 5, text for the CFO, should Pfizer acquire Allergan? So I will discuss on the dilemma faced by Pfizer and will discuss on the two alternatives whether to proceed the merger or to stop. And last, I will give the recommended solution for Pfizer. In this case, there are two parties involved, which is Pfizer and Allergan. Pfizer is founded in New York in 1849. Pfizer began in the pharmaceutical business with a candid treatment for an intestinal illness common in that period. By 2014, Pfizer still headquartered in New York and had grown to become a Fortune 100 company with over 8,000 employees, almost 50 billion in annual revenues, and a footprint in over 100 countries. And Allergan was formed in 2013 in a merger of two large pharmaceutical companies, Actavis and Warner Kilcots. Although Allergan's operations were large and a commercial footprint in over 60 countries, they were still considerably smaller than Pfizer's. Allergan was legally domiciled in Ireland, where it kept a small office but maintained headquarters in New Jersey, less than 50 miles from Pfizer's corporate headquarters. So the first issue that the Pfizer face is the decision whether to stop or proceed. So what risk should the MLU consider when evaluating the deal? So it is important that the MLU consider the following risks when he is going to make his decision. So the deal will impact the tax collection in the US. The US Department of the Treasury could plan to alter the rules related to the inversion. The United States Treasury could complain about deals that reduce taxes in this way, known as inversions. The controversy could delay the transaction. A bigger danger is that lawmakers pursue broader change in the rules so as to help American companies compete. That means Pfizer risks paying up for a fleeting benefit. The uncertainty of the context may affect tax rate and the possibility of tax evasion. Integration risk after the merger. Both companies are big pharmaceutical companies. The deal involves post-merger integration risk. Allergan has over 4,000 employees and Pfizer has over 78,000 employees. Also, the company will have multiple products and locations. It will be difficult to integrate the departments and affect the gross margin sustainability. So the second dilemma is, why does Pfizer need the merger and what is their current problem? In this dilemma, they want to grab tax saving, so they need to understand regarding the tax resident, tax saving and concept of tax planning. So there are two strategies, which is tax avoidance or tax evasion, which is non-allowable because it not follow the rule. But the tax avoidance or tax evasion is allowable, such as claim relief. So tax evasion are transactions used by a company, in our case Pfizer, whereby it becomes a subsidiary of a new parent company, like Allergan, in another country for the purpose of falling under beneficial tax laws. Typically, are used by US company to move to lower tax domicile. Technically, any company could make an inversion, but the long-term goal of public companies are different than private companies, while both seek to increase shareholder value. Private company owners must be mainly interested of profit, repatriation and potential business exit strategies. These problems are not as important to public companies that can exist in perpetuity. Even if a transaction is structured in a way to gain cash overseas, that cash will eventually be affected to taxes when it's repatriated to its US owners. If an exit strategy involves liquidating, distribution or a sale to another company, those gains would be affected to US tax in the majority of the cases. So the third dilemma is, if they want to proceed, is Allergan fit with the purpose of Pfizer plan to the merger? So the Allergan is based on Ireland. So Ireland is considered as low tax country, while us, Pfizer is high tax country. When they merge all expenses in this company, it will be based on the Allergan. So it will get higher expenses for higher tax countries. Income will be based on Ireland as it has a lower tax country. It is still following the regulations, so it is allowable. So they can minimize tax to be paid. So the dilemma is, does the deal make sense for Pfizer? If tax regulation do not change, what are the potential tax savings for Pfizer? Do the savings exceed the cost of the deal? So according to the case and the information of revenues of Pfizer, and considering a forecast of the following years, the potential tax savings for Pfizer could be calculated. Considering the revenue of each year using a projecting growth factor of 5.7% by 2020, the tax saving is calculated using the rates of 25% without the merger and 80% with the merger. So there is two alternatives for Pfizer, whether to proceed with the merger or to stop. So the first is proceed. So in 2014, Pfizer was still headquartered in New York, and they had grown to become a Fortune 100 company with over 78,000 employees, almost 15 billion in annual revenues, and a footprint in over 100 countries. Besides, Pfizer and Allergan both have a high brand recognition. Thus, it makes the decision stronger to proceed with the merger. Other than that, Pfizer's business now included medication including Viagra, the pen drug Lyrica, and Prevnar, a pneumococcal vaccine. Its vision for the future was comprehensive through working in partnership with everyone from patients to healthcare providers and managed care organizations to world governmental and non-governmental organizations. And Pfizer's also goal is to ensure that people everywhere have access to their innovative treatments and also the quality health. So most of the financial benefit of the merger would come from lowering tax rates on Pfizer's international operation. This is due to relocating its tax resident to Ireland. Pfizer's worldwide tax rate was estimated to drop from 25% to 80% in the first year alone. Pfizer will also obtain all of the Allergan Future's revenue and profits. The combined revenue and profits of the merged company were expected to total 68 billion and 21 billion respectively. Thus, the merger would help Pfizer keep up the large players in the pharmaceutical and biotech industry. So the second alternative is to stop the merger with the Allergan. So this is the reason that recommend to the alternative to stop, which is Pfizer had invested considerable time and resources in the failed 2014 attempt to acquire AstraZeneca, which it would also lower Pfizer's tax rate considerably. However, that deal was ultimately undone by resistance from AstraZeneca's senior leadership and political protectionism in the United Kingdom. And then the Pfizer revenues had declined over the last 3 years due to stock price having been relatively flat and investors were growing restless. So the MLO needed a deal that would improve the company's financial performance and competitive position among other global pharmaceutical giants. So if the merger with Allergan turns out to be an unwise decision, it can result in damage not only to their finance and net income, but also to their high brand recognition. Although regulators such as the Federal Trade Commission and the US Department of Justice often reviewed mergers for any adverse impact on the competition, Pfizer's proposed merger with Allergan was not expected to raise monopoly concern. Instead, the deal faced uncertainty with the US Treasury, which was becoming increasingly concerned about the tax-motivated mergers. So the best recommended solution for Pfizer is to proceed, because the first is revenue and profit of Pfizer will be increased. In this case, Pfizer needed a big move, so its revenues had a decline over the last 3 years based on the case. So the stock price had been relatively flat and investors were growing restless. So the MLO need a deal that will improve the company's financial performance and the competitive position among other global pharmaceutical giants. Pfizer will also obtain all Allergan future revenue and profit. The combined revenue and profits of the merged company were expected to total 68 billion and 21 billion respectively. 9. Thus, the merger would have Pfizer keep up with the large players in the pharmaceutical and biotech industry. Tax revenue have increased, so the higher corporate profits will result in higher corporate tax revenue. This allows the government to spend more money on public services like healthcare, education, and welfare payments. As a result, an increase in company profit benefits the general taxpayer indirectly. The second benefit of proceed, which is the tax saving, it will also greatly reduce costs to repatriate the 74 billion in overseas cash holdings that Pfizer had accumulated. While Pfizer's 25% effective tax rate were higher than that of its peers, it was well below Pfizer's marginal US tax rate, which is 40%. One way that Pfizer keep taxes low was by avoiding the repatriation of international profit. However, if its tax residency were moved to Ireland, Pfizer would pay 12.5% instead of 40% to repatriate these funds, potentially freeing up cash for other uses. Tax planning also installed the financially healthy habit of putting aside a portion of your income for investment that will help save taxes and protect the finance in the long run. One of the advantages of tax planning is that the company can deduct a variety of essential long-term purchases. In the Income Tax Act, for example, there are tax breaks for interest paid on a home loan, an education loan, and a saving account. Furthermore, if you live in a rented home but do not receive house rent allowance, you may be eligible for a deduction for your house rent. And last is lock holdings. Tax rates differ across countries, it creating both challenges and opportunities for multinational companies. Generally, companies pay income tax in the countries where profits were earned, no matter the location of their tax resident. Depending on the tax rate in their country of residence, companies might also have to pay additional tax in their country of residence. This was often the case when a company repatriated profits from a foreign country to its of residence, because the United States had among the highest corporate income tax rate in the world. Multinational firms that either were a resident of the United States or had US operation benefited from tax strategy that shifted income to lower tax country, either temporarily or permanently. So one commonly used strategy to temporarily defer US taxation on profit was through what was known as transfer pricing. On the sale of goods or services between, for example, a US parent and its foreign subsidiary, transfer pricing balanced differing jurisdictional requirements by moving a portion of a firm's operation into a foreign jurisdiction, so that the subsidiary could charge the US parent for purchases of goods or services. Although transfer pricing often required substantive operational changes, in example, opening an office or increasing head account in a foreign jurisdiction, it could also enable the company to shift profits to the lower tax foreign subsidiary by having more income in the foreign country and more expenses in the United States. However, one consequence of this type of tax planning strategy was that profits become locked into the low tax country. They would be subject to higher US taxes if they were repatriated to the United States. In Pfizer's case, the stockpile of foreign held profits totaled 74 billion. Traders and investors may lock in profit for a variety of reasons, but the most common is to reduce risk. So the long-term investors may choose to lock in profits in order to maintain portfolio balance. To maintain an ideal portfolio allocation that minimize risk and maximize profit, the investor may lock in profit for a portion of the outperforming fund and redistribute the proceeds among the other four funds.